Good morning, everyone. My name is Kevin Olico with the National Partnership for New Americans, NPNA. We are going to begin today's webinar, Paycheck Protection Program Round 2, Updates and Guidance for Nonprofit Organizations and Small Businesses, which will include a presentation by Tracy Ward, Director of Self-Help Venture Fund's SBA 504 Loan Program at Self-Help Federal Credit Union, a political update from James O'Neill, Director of Suburban Outreach from the Illinois Business Immigration Coalition, and we will also be joined by Cook County Commissioner Kevin Morrison. We ask that you stay through till the end of our Q&A section and submit any questions via the chat. To begin today's program, it is my pleasure to introduce Nicole Malaku, Executive Director of NPNA.
Thank you, Kevin. Good morning or good afternoon, everyone, depending on where you're joining us for today's webinar. I'm Nicole Malaku, the Executive Director of the National Partnership for New Americans. NPNA is a national organization made up of 41 immigrant rights organizations across 37 states. Our members move local, state, and federal organizing and advocacy campaigns for immigrant rights while also providing essential services to our communities. During this difficult time, our organizations are working hard around COVID response and recovery efforts, including the rollout of the Payroll Protection Program, PPP, and supporting immigrant small businesses to access and be able to fully forgive PPP funds. NPNA is grateful to be a partner to Cook County Recovery Initiative with organizations like the American Business Immigration Coalition, ABIC, the Illinois Restaurant Association, President Preckwinkle of Cook County, and Self-Help Federal Credit Union to ensure that the Payment Protection Program, PPP, is accessible to small businesses and nonprofit organizations in Cook County, Illinois. In a minute, we'll hear from Cook County Commissioner Kevin Morrison. Throughout NPNA's work, we've been able to ensure that more than 11 million in PPP funds went to nonprofits and businesses within our network. On December 27, 2020, $900 billion COVID relief package was passed into law. This new relief included the reopening of the Paycheck Protection Program. Today, we are going to focus on the changes and guidance with the second round of PPP program, which will include application guidelines for both small businesses and nonprofits, loan forgiveness guidance, and more. We'll also continue to work with our partners to advocate for continued federal support from Congress and support for small business and allocating funding specifically for minority-owned small businesses that have been hardest hit. A big thanks to our partners from Self-Help Credit Union, the American Business Immigration Coalition, and the Cook County, Illinois for helping put on today's webinar. And now it's my pleasure to introduce Kevin Morrison, Cook County Commissioner. Commissioner Morrison is proud to be serving his first term as Cook County Commissioner in the 15th District. Commissioner Morrison's priorities include improving access to critical health care services such as mental health services, supporting small business development, and pushing for a more fair and transparent home assessment process. In 2016, he was elected as the first openly LGBT commissioner and committed to speaking up for the most disproportionately impacted and marginalized communities. Thank you for your leadership and support, Commissioner Morrison. I'll turn it over to you now.
Thank you so much, Nicole. I greatly appreciate it. And thank you so much, Kevin, for the invite. And thank you to the NPNA and all of the groups supporting these initiatives. It's an honor to be with all of you today. I'm Kevin Morrison. I represent the Northwest suburbs for Cook County. This has been a very difficult year for all of us. So I pray that you and your loved ones are keeping safe and healthy at this time. I was grateful to see the support that PPP was able to bring to our critical businesses and communities throughout the beginning of this pandemic. And I really look forward to seeing another package passed by Congress to bring such critically needed support. I advocated from the earliest days to not only creating loan programs for our small businesses, but also critical renter and mortgagee assistance that Cook County was able to give out thanks to the CARES Act. Right now, it goes without saying that there are so many folks in desperate need of additional support. And I am working to not only make sure that that support goes out to those who need it most, but also it is being done with an equity lens. I've worked from my earliest days on needs of equity and dealing with systemic disparities that continue. I know that a lot of the work NPNA does deals with helping new Americans. You know, I'm the grandson of immigrants. My stepfather is an immigrant. And so it's critically important that not only we are reaching out to those who are in need, but also we're able to adequately communicate in those efforts. And that's why I'm proud that Cook County is taking leaps in terms of better language access for reaching out to all of our beautiful, diverse communities throughout Cook County. One thing I was able to do within my first year was pass the vote ordinance, which made Cook County at top of the line in terms of translated languages allowed on the county ballot in elections. We are now up to 12 different languages that individuals could participate in. And so my office is always open to be helpful in supporting these initiatives. And, you know, I will be advocating for Congress to ensure that we are keeping our small businesses afloat throughout this pandemic. We're sending more critical support in those efforts, and we're making sure that individuals are being able to stay housed during the continuing economic disruptions that COVID has caused. Yesterday, Cook County announced a website to sign up for applications to create appointments to get your vaccine. The unfortunate truth is vaccine numbers are limited at this time, but with additional support from the federal government, we hope to see those numbers increase in the weeks and months to come. But I just wanted to shout out to make those appointments, go to vaccine.cookcountyil.gov. If you need additional support, especially language support, we have a hotline, which phone number is 833-308-1988. I will put both of those in the chat. But thanks again for inviting me here today, and please continue keeping me apprised of your efforts and ways that Cook County could be more supportive in the days ahead. Thank you so much.
Thank you, Commissioner Morrison, for joining us today, and thank you for all the great work you are doing with Cook County. NPNA is proud to support the county as a member of the Cook County Recovery Initiative. Next, it is my pleasure to introduce James O'Neill, Director of Suburban Outreach for the Illinois Business Immigration Coalition, with a political update.
Hi, folks. Thanks for joining us today. I'm going to focus a little bit more on on the PPP and the stimulus checks and how they're different from the first and second rounds that we saw from the federal government. So when it comes to PPP, in the new appropriations bill that came out for Paycheck Protection Program, it includes $284 billion for the program, and of that includes $138 billion that was unspent from the last round of PPP that was reinvested again. And the program has been extended to March 31st, 2021. So make sure that you are applying as soon as possible if you qualify. In the second round, borrowers are also allowed to draw a second loan. So if you received funding in the first round, you may still be eligible to receive funding again in the second round. And the businesses that are eligible for PPP have been expanded. One example of this is that chambers of commerce are now eligible to take a draw from this second round of PPP. And for certain businesses, the amount of money that you're allowed to take has been expanded for certain business types. The forgiveness process has also changed in the second round. For loans under 150,000, there's a new and simplified one-page application for forgiveness. It's basically just a double check that you did your best to spend the money on the correct things and that you spent 60% on your payroll costs. And the split between payroll costs and non-payroll costs is the same to qualify for forgiveness, but what counts as a payroll cost has been expanded. And so it now includes group health insurance benefits, life insurance, disability benefits, vision, and dental insurance. Borrowers in this round are allowed to choose a covered period between 8 and 24 weeks. This round of PPP also includes dedicated set-asides for CDFIs and MDIs and businesses that operate in low-income areas. Two really important and very good clarifications were made in this round of PPP as well. One of them being that the interest rates on PPP loans are non-compounding and non-adjustable, and that forgiven PPP loans are not taxable, and forgiven expenses are tax deductible. So of that money that was allocated for this round of PPP, it includes a set aside for CDFIs and MDIs that I mentioned of $15 billion, and another $15 billion issued by small depository institutions. This also included funding for EIDL. So if you have 500 or fewer employees, most nonprofits and faith-based organizations are all eligible for the EIDL. You are able to apply for both PPP and EIDL. And I'm sure, as Tracy will mention later, that just slightly changes your calculations a little bit when it comes to forgiveness. Sole proprietors and independent contractors are also eligible for the EIDL program. When it comes to immigration, non-citizen business owners are allowed to apply for the EIDL as long as they are legal permanent residents. Unfortunately, any other immigration, unfortunately, all other immigration statuses do not qualify for the EIDL program. One more change that I want to mention is the stimulus checks for mixed status families. In the first round of stimulus checks, U.S. citizens who are married to undocumented immigrants were not eligible to receive checks, but that issue was corrected in the second round, and you can retroactively claim, those people can retroactively claim their first round stimulus check as a tax credit on this coming filing of your taxes. The PPP funding also included a new program called the Shuttered Venue Operators Grant Program that I very quickly just want to mention. These are grants instead of loans, so there is no forgiveness application. If you receive a Shuttered Venue Operators Grant, then it is a grant, it's automatically forgiven. Eligible companies for the Shuttered Venue Grant would be live venue operators or promoters, theater producers, live performing arts or organization operators, some museums, zoos, and aquariums that meet specific criteria, movie theaters, and talent representatives. So if you feel that you apply for that, please go ahead and check out the SBA website for that as well, because a grant is always better than a loan. And that's what I've got for you in terms of a legislative update. I'll kick it back to Kevin.
Thank you so much, James, for the update. Next, we are excited to introduce the amazing Tracy Ward, Director of Self-Help Ventures Fund's SBA 504 Loan Program at Self-Help Federal Credit Union for her presentation.
Thank you, Kevin. Very, very nice introduction. Hope I live up to it. We can go ahead and start with the first slide. Want to just kind of talk through some of the updates, some that James just covered, and then we'll really do an overview of PPP, the first PPP loans, if you haven't already received one, or the eligibility requirements for the second PPP loan. And then we'll try and wrap up in time to get to some of your questions. Next slide. So as James just said, some of the big news from the Economic Aid Act that passed at the end of December is that it reopened PPP. So if you haven't gotten a PPP loan yet, now you can apply between now and the end of March to get a PPP loan. It also created the opportunity for the hardest hit businesses and nonprofits to come back and get a second PPP loan. So we'll talk through those details in this slide so you'll know whether or not it's something you'd be eligible for. James talked about how the Economic Aid Act expanded PPP eligibility, some of the things you can use the funds for, and added a little bit more flexibility in the rules so that you can hopefully find this program more useful. It also did streamline forgiveness for loans up to $150,000. We were really pleased to see that. It's much less complicated, and we'll go over that in a little bit more detail. I've seen a couple of questions in the chat about SBA's economic injury disaster loans called EIDLs. So I want to just talk through that a little bit here before we move more into PPP. SBA's EIDL program, Economic Injury Disaster Loan Program, is a fantastic option for you. You would apply directly through SBA. You can go on their website and they have information on this program. In general, EIDLs are loans. They have a really low interest rate and you have 30 years to pay it back. They're deferred for the first 12 months, so you wouldn't have any payments for the first 12 months. So this is a great potential option for your business or nonprofit if you are not able to get enough grant funding to get through this period. Again, PPP, if you use it as intended, it can be fully forgiven. So that's really a grant if you use it the way you're required to use it. There are other potential grant options you should definitely explore. But if in addition to those options, you still need additional capital to get your business or your nonprofit through this, SBA's EIDL loans are a good option. As part of the CARES Act and the Economic Aid Act, SBA also can offer what is called an EIDL advance. These are grants up to $10,000, and they were available over the past several months, and part of the Economic Aid Act has opened these back up for businesses that are really hard hit. So there are additional requirements, but if you check SBA's website, they will add information about who is now eligible to get what's called a targeted EIDL advance. So you can get up to $10,000, or if you already got the old version of the EIDL advance, but it was less than 10,000, you can ask for that difference now. Again, there are more limitations around it, but it's definitely something you should be checking SBA's website. And if you qualify, you should apply. James talked about the clarification of tax treatment for PPP loans, basically just to really be as clear as possible on that, because this was great news. Your PPP loan is not considered income on your tax return. So you do not have to pay taxes as if that were income. Same thing if you got an EIDL advance, that grant is not considered income. And the Economic Aid Act clarified that, you know, you're spending your funds, your PPP loan funds, you're spending on your payroll, on your other eligible business costs. Congress reversed the earlier IRS ruling and now says you can count those as deductions on your tax return. So just like you would normally count all of the amount you spent on payroll or rent as a deduction on your business tax return, you can continue to do that even if those funds were from the PPP loan. Two other big kind of non-PPP updates. We talked about the target EIDL advances, so check SBA's website for that. And James mentioned the shuttered venue grants. If you're a live performance venue, a museum, a theater, we think the shuttered venue grant is a better option for you than a PPP loan, and you can't get both. This is one thing where you have to choose either the shuttered venue grant or the PPP loan. So look at that option. You'll find out about that on SBA's website. It's fine if you have already gotten a PPP loan in the past, but starting, you know, January 1st, you could not get a PPP loan and a shuttered venue grant. So just keep that in mind if you're an organization that might fall within that shuttered venue grant category. Next slide. So now we'll really talk about PPP. This loan program, Paycheck Protection Program, was intended to help small businesses and nonprofits keep your staff employed during this crisis. If you use this PPP loan the way you're required to, it is 100% forgivable. You have to do at least 60% on payroll and use the rest for other eligible costs. You have to use it within 24 weeks of getting the money. One of the great things about the Economic Aid Act was it gave you more flexibility. Now you have anywhere from 8 to 24 weeks to use these funds. And you have to maintain staff and compensation levels. And we'll talk through some of the exceptions on those. If you are not able to meet all of those requirements, your PPP will become or will remain a loan, and you'll pay it back to your lender over the loan term. So for new loans, that would be over 5 years. Ideally, it's all forgivable, but if you can't use 100% of it for, within these guidelines, then whatever portion was left, you would just repay to your lender over the next 5 years. Next slide. So general eligibility requirements for any PPP loan. Most small businesses and nonprofits are eligible. So sole proprietors, independent contractors, 501c3 nonprofits. The Economic Aid Act added 501c6 nonprofits, so that helps a lot of organizations that couldn't previously get a PPP loan. Faith-based organizations, churches, you're eligible for a PPP loan to cover your payroll costs and some other expenses. You have to have been operating on or around February 15th, 2020. So if your business or nonprofit started after that date, you're not eligible for PPP. This is really meant to help businesses and nonprofits that were existing right when COVID hit to make sure you get through it. You have to be facing economic uncertainty due to COVID. So if you're doing great, this hasn't impacted you, you're not really eligible for PPP. There are very few, if any, organizations that are not impacted by COVID-19. So that I don't think is much of a limitation, but you should be aware of it. If this is, I apologize. If you have not gotten a PPP loan already, in general, you have to have 500 employees or less to get a PPP loan. If it is your second PPP loan, that restriction is a little tighter. You can have only 300 employees or less in most cases. Because second PPP loans really are intended for the hardest hit businesses, there are some other requirements in addition to the ones we've just gone over. You have to show that you've had at least a 25% or more reduction in gross receipts looking at 2020 and comparing to 2019. You have to show, or you have to at least certify when you apply for your second draw PPP loan, you have to certify that you've used your first PPP loan for eligible purposes. You do not have to have gone through the forgiveness process on your first PPP loan to apply for your second draw PPP loan. As long as you've used those funds, you can apply. And you have to still be operating or still intend to reopen. If you have had to permanently close and you are not planning to reopen your business or your organization, then you're not eligible for this second PPP. Next slide. So let's talk about what your loan amount is. If this is your first PPP loan, it's your average monthly payroll amount times 2.5. It's intended to give you about 2.5 months worth of payroll. So you can keep paying your staff for at least another 2 months or so, and you can pay a few other expenses of your organization. If you got a first PPP loan and used it, and this is for your second PPP loan, in most cases, it's the exact same formula, your average monthly payroll times 2.5. One good improvement with second draw PPPs, if you are in the accommodations or food services industries, so hotels, restaurants, food trucks, caterers, bars, you get 3.5 months worth of your average monthly payroll. So you'll get a bigger PPP loan to help you get through a little bit longer period. Congress recognized that these industries have been particularly hard hit. So I'm really trying to address that with this new version. Thinking about NAICS Code 72, it's important that this has to be your primary business activity. This is what's called your business activity code on your tax return. So in most cases, you enter your NAICS code on your tax return, and that is the NAICS code you should be using when you apply for your PPP loan. It's sometimes businesses, leave that line blank on their tax return. So if you left that blank on your 2019 tax return, you can still document that you are a food service business or in the accommodations industry. SBA has some requirements around that, but in general, you should be looking at your 2019 tax return to see if you used a NAICS code that starts with 72, if you want to be eligible for this extra amount of funding. Average monthly payroll, quickly, just wanted to flag, if you are a Schedule C or Schedule F filer and you don't have employees other than yourself, so sole proprietor, independent contractors often fall in these categories, your average monthly payroll is the net profit line of your Schedule C. You divide that by 12, and that is what SBA considers your average monthly payroll. So you would multiply that by the 2.5 months multiplier to get your loan amount. If you have employees, so for nonprofits, you pay employees, you have 941s to document that. Whether you're for-profit or nonprofit, if your business or nonprofit has employees, you calculate their average monthly payroll by looking at the gross wages that you pay them. And then if you have benefits or state and local taxes that you pay on top of their gross wages. So maybe you're paying funds into a group retirement account or group insurance, medical benefits. You can count that amount, but you'll pull that mostly from your 941s to document what you're paying your employees. Next slide. So for the second draw PPP, and this only applies to your second one, this reduction in gross receipts is not relevant if you've never gotten a PPP. But if you got your first PPP already and you want to apply for a second PPP, since these are intended just for the really hardest hit businesses, Congress added a requirement that you have to show that you've had a 25% or more reduction in your gross receipts in 2020 as compared to what your gross receipts were in 2019. For for-profit businesses, this includes all revenue from whatever source, so your sales, interest, rent income, you include all of that. You do not include net capital gains and losses. Generally, if you look at your tax return filing, SBA is looking at the line that is total income or gross income. Depends on what type of tax return you file, what this is called, but you'll look at that line and you'll, I think I have minus cost of goods sold. And I'm going to have to double check that. I think it's actually the total income line plus cost of goods sold. Apologies for that. Because it's trying to get at what your total receipts, what your revenues were. You do not include your first PPP loan, or if you got an EIDL advance, your EIDL advance, don't include that as income. That you don't have to worry about that. That doesn't increase your gross receipts in 2020. And then just quick example of how you figure it out. If you look at, you did $50,000 in 2019, and in 2020, you've only been able to get to $30,000 for that year, you easily meet this test. You're way over a 25% reduction. For businesses that had to close or were shut down for a couple of months, you're probably going to meet this. There is a really good document that SBA has put out this time called Second Draw Loan Guidance. And you can find that on SBA's website. You can find that on our website. It really walks through by entity type. So whether you are a sole proprietor, whether you are an S Corp, a nonprofit, how to calculate this. So that's a really helpful document. Next slide. If you are a nonprofit, SBA is calculating this or defining this as the gross amount you've received without any reduction for your cost or expenses. So this includes any grants you've received, any income you have from sales, rents, membership dues. Essentially, SBA is taking your total revenue line from your 990 and adding back all of the costs and expenses that you've deducted from that to get your total gross receipts. Again, your PPP loan doesn't count in this, and if you got an idle advance, that doesn't count in this. And point you to that same guidance document from SBA, which really walks through this in detail. Next slide. So you've gotten your first or second PPP loan. What can you use it for? At least 60% of your PPP loan has to be used for payroll costs. There's no exception to this rule. So you want to make sure that you're putting at least that portion towards payroll costs. If you do less, it's just going to reduce the amount that gets forgiven. You'd still be eligible for, some forgiveness. Want to talk quickly about the idea of double dipping. If you are a nonprofit and you receive federal grants that are for payroll, you would not want to use that amount of payroll towards your PPP. So you want to do one or the other. We recommend you talk with your funders if they have given you a grant that has to be used for payroll, to see if you can use it for a different time period than what you're using your PPP funds for, or if you can apply it to other needs of your organization, so that you can really maximize and keep your nonprofit operating. So that's one thing to keep in mind. If you are a sole proprietor, independent contractor, another thing to keep in mind under this idea of double dipping is unemployment compensation. You can't draw unemployment compensation if you are using PPP to cover your payroll. So that's as the business owner. So you would want to consider, which is going to be more beneficial. You just can't use PPP for your payroll for the same week that you're drawing unemployment compensation. So you need to think about that. Non-payroll cost that you can use your PPP loan to cover. This has been expanded a little, so you have a little bit more flexibility to use these funds, at least up to 40% of these funds, for some of these other needs of your business. So if you have secured debt, whether that's a mortgage on your building or an equipment loan, the interest portion of those payments you can use PPP funds for. Your business rent, whether it's building or, again, equipment leases, you can pay those payments with PPP. Utilities of your business, the good expansions in the Economic Aid Act allow you now to spend some of this money on PPE. So if you need to buy masks for your employees so that they can work safely, you can include that cost. You can even, if you have to add a drive-through window or an air filtration system, those costs can be included. Again, this needs to all be within 40% or less of your PPP loan if you want to be fully forgiven. If you had property damage that insurance didn't cover because you were in an area where the protest caused property damage, you can cover that. If you have supplier costs that are essential to your operations, you can cover that. And then there are some operations expenditures. These are mostly things for the cost of software for your billing systems or your payroll. Those types of operations expenses you can now use your PPP funds for. Next slide. So if your PPP loan, whether it's your first one or your second one, if it is $50,000 or less, you do not need to worry about this part. Maintaining staff and wage levels is a requirement for any loan over $50,000, but you're exempt if you got less than that. If you're over $50,000, you need to maintain each employee's wages, and you need to maintain your total staff hours based on full-time equivalents. There are exceptions in both cases, so I want to talk about some of those, but first want to just really be clear, these are two separate calculations. So assume you had an employee, Carla, before COVID-19 hit. She made $20 an hour and worked 40 hours a week. After you got your PPP loan during your 24-week period to use your PPP loan, you kept paying Carla $20 an hour, but you had to cut her time back. You weren't open, so she only worked 20 hours a week. Is this a wage reduction of greater than 25%? No. You continued to pay Carla $20 an hour. Is this an FTE reduction? Do you have less full-time equivalent employees? Yes. You did have one FTE. Carla worked 40 hours a week, but during your covered period, she only worked 20, so she's only half an FTE. So it's really important to think about those two things as two separate steps so that you're not harming yourself by double counting something. Next slide. Exceptions. So on this FTE count, there are many reasons that Congress and SBA have recognized that you may have fewer full-time equivalent employees now, and it's not because you weren't trying to retain your staff. So they're giving you exceptions for these. So if you have open positions and you rehire the person who you had to lay off or someone else to fill that open position, that doesn't count against you. If you offer to rehire an employee that you laid off and they refuse to return, that doesn't count against you. If you have to fire somebody, it happens sometimes that an employee is doing something that you just can't tolerate, and that's okay. For all of these things, you just need to document that so that if SBA does review your loan, you can show them that you did meet this exception. Big exception that I think applies to most businesses that we're working with, and really even to most nonprofits. If you were unable to operate at your pre-COVID level of activity due to compliance with COVID rules and regulations and guidance, then you're not held accountable for having to reduce your total number of employees. So if you have fewer full-time equivalent employees because you've had to be shut down for a portion of time during COVID, then you should have an exception to that, and it should not impact your total forgiveness. Next slide. So how do you apply for forgiveness? Whether it's your first or second PPP loan, you're going to apply for forgiveness with your PPP lender. A wonderful thing that was passed in the Economic Aid Act is a streamlined forgiveness form. So if your loan is $150,000 or less, you now have what is essentially a one-page, just a handful of information that you have to fill out. You're going to put your total number of employees. You're going to put the total amount you spent on payroll costs. And remember, this needs to be at least 60% of your PPP loan amount if you want to be fully forgiven. And you're going to enter your requested forgiveness amount. For most of you, this is going to be your total loan amount. But if you know you didn't comply with some of the rules and that you need to reduce that, then work with your lender to make sure that you're reducing that appropriately so that you can sign and certify that you are entitled to that amount of forgiveness. These again are for loans up to $150,000. If your loan is more than $150,000, you do still have the longer forgiveness forms, but SBA has updated those to incorporate some of the additional flexibility. And again, that includes you have additional costs that you could spend your loan to cover, and you can choose the end of your time period. So before, you either had to choose an 8-week period to use the funds or a full 24-week period to use the funds. Now you can choose any date between 8 and 24. So if you finished using your funds in 13 weeks, you can choose a 13-week period. And that helps you on some of the FTE compliance, the wage compliance. If you had to, while you had your PPP loan funds for 13 weeks, you were able to keep paying your staff and keep everybody employed. But once you used up your PPP loan, maybe you could not afford to continue to keep that staff. Then since your covered period can end the same time you finish using your loan, you're not held accountable if you later had to lay people off because COVID is still ongoing. When should you apply for forgiveness? I think this is one of the last things I want to just highlight before we move to Q&A. You technically can apply for forgiveness at any time before your loan matures. So if you got a PPP loan anytime from April to early June last year, you have a 2-year note. As long as you apply within 2 years of that, when you got that loan, you can apply for forgiveness. After June, it's a 5-year note. Technically though, you really want to apply within 10 months of when you finish using your funds. So if you got your loan in May and you took the 24-week period and finished using your PPP loan in October, then 10 months from October is the window that you want to make sure you apply for forgiveness in. And the reason for that is as long as you apply for forgiveness within that 10-month window, your PPP loan will remain in deferral. You will not have to make a payment, even though it may have been, closer to 1.5 years since you got it. If you apply within that 10-month window, your loan stays in deferral until SBA has processed your forgiveness request. If you miss that 10-month window, you are going to have to start making monthly payments, even if you haven't asked for your forgiveness to be processed. So those are kind of the time periods to really keep in mind. With that, I will wrap up and we can move to Q&A.
Thank you so much, Tracy, for the presentation. Just so we will move to our Q&A section with both Tracy and James. If you have any specific questions, please feel free to drop them into the chat and we will try to get to them. But we have some already, so we will get started. The first question can go to Tracy. What documentation is acceptable to prove 25% gross receipt reduction for a specific quarter? The IRS Form 990 is annual and not broken down by quarters.
Yes, very good point. So you are allowed to show your 25% reduction either annually, using the calendar year in most cases, or you can pick a quarter. So if you pick second quarter 2020, you would compare that to second quarter 2019. So you just have to compare to the same quarter each year, and you can show that you've had this 25% reduction just by looking at one quarter. If you're doing it quarterly, the things SBA says they will accept are your quarterly financial statements. You would want to identify which things count as gross receipts. So it's still really helpful to look at how SBA is identifying that based on your 990 or your tax return, because you'll see the types of things that you need to include in that definition of gross receipts. You can, if you have audited statements, obviously that's the gold standard, but you can use internal statements. They do not have to be audited financials. If you have your internal quarterly statements, you will have to sign and date and initial every page, but you can use those. You could also use bank statements. So if you have monthly bank statements, for a lot of sole proprietors, this may be an easier way to do it than quarterly internal financials. But you would identify, you would mark on those which items, which deposits were gross receipts versus, some other reason that deposit was in your bank account. And again, you would compare one quarter of 2020 with the same quarter of 2019. And then annual, if you are doing an annual comparison, your 2019 and 2020 tax filings. Right now, you probably haven't done your 2020 tax filing. You would prepare a draft. When you come back to apply for forgiveness of your second PPP loan, you would be required to provide the actual filed tax filing, because that's what SBA is going to base forgiveness on. They're going to look at the actual filed filings. Anyway, it's a kind of a big list, but hopefully that gives you something to work with on what type of documents you need to collect to be confident that you can certify that you have a loss of at least 25% this year over last year.
Thank you. This next question for James. If a nonprofit has received an EIDL loan, can they apply for another EIDL loan, and is EIDL forgivable?
So there's two parts to that question, and there are also two things that are offered by the SBA. So there's the EIDL, which is the Economic Injury Disaster Loan, and then there's the EIDL Advance, which is a portion of the loan just given up front and up to $10,000. Currently, you cannot apply for the EIDL Advance. The funding for that is up, but you can still apply for the Economic Injury Disaster Loan, which is not forgivable. It is a loan program. And the first part of the question was, can you apply twice? The answer is no. Based on the current guidelines, once you have received one, you cannot receive another.
Thank you. Back to Tracy. Can you give examples of what falls under the new category of forgivable costs, operation expenditures? For example, would a Zoom business subscription become forgivable under this category?
Oh, so I don't know the answer to that. I can, the things that SBA listed that would qualify are if you have software accounts necessary for your business operations, things like the software for your payroll or your QuickBooks software, or if you do inventory tracking, those types of things. So I would lean towards Zoom may not be included. Hopefully we'll get some more clarity on that, but right now it's not exactly like the other things in the list that are clear SBA will accept. So I'd be a little nervous about using that one.
Thank you. For James, where does one apply for a shuttered venue grant?
Right now, the application has not opened up yet, but you can find the application on the SBA website. If you go to sba.gov, there's a tab on the website that's COVID-19 related relief. And there you'll find the links to apply for both EIDL and for the shuttered venue grant once it opens up. We do expect it will be open by the end of this week.
Got it. Thank you. For Tracy, our first PPP, the bank calculated based solely on payroll. How do we account in our second PPP for the great reduction in S-Corp income in relation to the loan amount?
So your second PPP loan is calculated the same way as your first PPP loan. It is average monthly payroll multiplied by 2.5. And again, multiplied by 3.5 if you're a restaurant or hotel. Now we have seen cases where some lenders for the first rounds of PPP before SBA had issued specific guidance on how you determine what average monthly payroll is, that there were different methods and some of those methods are no longer eligible. Once SBA said, here's how you do it, that's how we have to do it for the second PPP loan. But in general, your second PPP loan, you should be able to get the same amount that you got for your first PPP loan.
Thank you. James, is there a good contact to reach representatives for the EIDL program?
Yeah, so again, as I mentioned, the application itself is on the SBA website, sba.gov, and then you'll click on the COVID-19 relief, and you'll find the link for the application. I'm also sending in the chat the toll-free number specifically for EIDL loan questions with the SBA. That is 800-659-2955. And then I will also go ahead and drop my email address. Just typing here, and please feel free to reach out to me if you have any questions on EIDL or PPP. And just briefly, I'll take this moment to talk about what the EIDL application process looks like. You'll submit the application, and then SBA will send you back a loan quote. And that loan quote is the maximum amount that you can ask for. So then you select how much you're going to be borrowing up to that amount. But once you get your loan quote, that is not the same thing as being approved for the loan. After you receive the loan quote and then make your selection in terms of how much you're going to borrow, it goes back to the SBA for the final application review, and then comes the decision. And you'll either get a letter in an email that says you have been declined and that you're not going to receive a loan, or you'll receive your approval letter along with all of the documentation that you need to fill out and sign in order to access the funds.
Thank you. For Tracy, as a nonprofit, how do we demonstrate a section of income that was raised for an emergency building repair, not regular income, therefore, in our estimation, shouldn't have counted towards regular loss?
So I think you probably will be okay. I think we'd need to look, so definitely poll, because I think it does a pretty good job. SBA has a document on their website. It's on our website with our PPP documents that is called How to Calculate a Second Draw PPP Loan and 25% Reduction. And they've done a pretty good job of trying to explain exactly what they mean for nonprofits as to what has to be included in your calculation of gross receipts. So I would want to look really closely at that definition, but I do think what you're talking about, I think, is something that potentially could be excluded so that you are really comparing apples to apples. But definitely I want to point you to that so that I'm not steering you in the wrong direction.
Back to James, another question of EIDL. If I'm denied for an EIDL loan, can I apply again?
Yes, you can. Within the 6 months of being denied, you do have the ability to sort of appeal that denial with the SBA. But then after those 6 months are over, you are able to put in another application if you want. Again, if you were denied the first time, it's probable that you'll be denied a second time unless something major has changed in terms of your application and the calculations that SB makes on who gets the loans from your first application to your second application. But yes, you are always welcome to apply a second time.
I think this question can go either to James or Tracy. Can you draw a second PPP loan and an EIDL advance loan?
Yes. So there's no prohibition against having a PPP loan and an EIDL, an EIDL loan or advance. You can and should apply for all if you're eligible and need those funds.
The only thing I would add to that, Tracy, is that currently there is no funding available for the EIDL advance. So you cannot apply for it right now, but you can apply for the loan.
Good point.
For Tracy, it's been 7 weeks since I've applied for forgiveness from my first loan lender. Should I be concerned?
Not necessarily. Our process so far, we're seeing that when it takes a couple of weeks for the lender to review your forgiveness request and make sure that everything is in order so that then it can be submitted by the lender to SBA. SBA has up to 90 days to review it once the lender submits it. In most cases, we're not seeing SBA take nearly that long. We're typically getting a response from SBA within maybe 2 or 3 weeks, but SBA is randomly reviewing a certain number of PPP loans. And on those, they're reaching back out to the lender and just asking for additional documentation. If that's happening, your lender will reach out to you to get that documentation from you. Our experience has been that SBA is trying very hard to help you get forgiven. Our experience with that has been very positive. That if SBA reviews a loan and they see something that would make you ineligible or make part of your forgiveness ineligible, they're really trying to reach back out to the lender and to the borrower to figure out if you can provide that additional piece so that you could be fully forgiven. So it's possible SBA is in the process of reviewing the loan. Again, that shouldn't be anything overly scary. They're just doing a random review of a certain percentage of these loans. And, but it also could be that it's just still working its way through the process. I think SBA had been responding to us within about 2 or 3 weeks once we submitted one on most loans. And now that the PPP has reopened, I think their timing is slower because they are juggling a whole lot more, like all of you are. And my expectation is, you know, it's probably fine. You'll hear from your lender. You might just follow up with them and say, you know, where are you in the process? One thing to just highlight, you do not have to get through the forgiveness process on your first PPP loan to apply for and receive your second PPP loan. But if it is one of the loans that SBA is reviewing, they will hold off on approving your second one. You should go ahead and apply, and then you kind of get the funds allocated, but they will hold it until they finish their review of your first one, if they are conducting a review of your first one.
Thank you. So we're coming to the close of our webinar. Tracy, James, is there anything that you'd like to speak to before we close?
One quick correction. I mentioned it as we were going over the slide, but want to highlight it again. And Kevin, I'll send you a clean copy. I made a significant error on the slide that talks about how businesses should calculate gross receipts. That is your total income or gross income plus your cost of goods sold, not minus. So I'll get the slide updated, but just wanted to highlight that again one last time so we didn't. Apologies for confusing people on something that's confusing enough without my typos.
And the only thing I would add is please don't be shy about asking questions. These programs exist to help people out. So if it's ABIC or NPNA or self-help, please don't feel shy about asking questions. There are no stupid questions. These are new programs. So please just feel free and liberated to ask questions.
Thank you. Quickly, a question came in for Tracy. Would you be able to post a link to the document you referred to about how to calculate the 25% reduction in income?
Yes,
Okay.
I will. Or at a minimum, I can get it to Kevin and Kevin can post it.
Yes. We are at the end of our time here. We want to thank our participants today for joining us. Thank you, ABIC. Thank you, Self-Help Credit Union. Thank you, Commissioner Morrison, for being here today. Thank you for everyone who participated. A reminder, the presentation, the recording, and resources that were mentioned in this webinar will be emailed to everyone who had registered, along with additional stimulus resources and contact information if you do need technical assistance. So thank you again to all the presenters and partners, and we hope everyone has a good day.